Business and Technology, Chapter 15. The name of chapter is the relationship between accounting and other business functions. I mean, how accounting department communicate with other different departments of the business. I mean, what kind of information is normally shared between accounting department and other business department like marketing department, production department, sales department, purchase department. I mean, what kind of information is normally transferred between accounting department and other production, marketing, sales, purchase department. We're gonna discuss now. So first, it's relating to purchase department. I mean, what is the relationship between accounting and purchase department? I mean, why they are linked with each other. I mean, what kind of information is required by accounting department from purchase or purchase from accounting department? I mean, regarding what matters this purchase department and accounting department communicate with each other. So the purchase department is also called procurement department. Procurement means purchasing. Is there any difference between procurement and purchase? Procurement word is normally used for capital nature purchasing. Capital means asset purchasing. Purchase word is normally used for inventory purchasing, raw material purchasing. Procurement means capital nature purchasing. Capital means asset. If company want to buy non-current assets, so that will be called procurement. So purchase buying function is responsible for placing the following up orders. It coordinates with the accounting department as follows. Establishing credit terms. Establishing credit terms. Mean purchase department require information from accounting department for how many days we should require credit from the supplier. Because if we are placing order to supplier on credit basis, when we're gonna pay in future. So up to how many days we can request the supplier to provide us credit either for 30 days, either for 60 days. So that accounting department can manage cash of the business, cash flow of the business. So they require information with each other. Meanwhile, placing order to the supplier, purchase department require information from accounts department for how many days we should require credit to the from the supplier. So the accounting department will work with the buying department, mean purchase department, to liaise, mean contact with the supplier and obtain a credit account and to negotiate credit terms which are acceptable. The longer the credit period we receive from the supplier is better for the business. Because longer mean instead of 60, we need to make payment in 90 days. This means we can manage our cash flow more easily. The shorter the credit period from supplier will affect our short-term cash flow management. Prices mean purchase department need to make sure regarding the finance available from accounting department, mean at what price we should buy the inventory. So the accounting department can advise the buying department on the maximum price that should be paid to maintain margin. I mean, what would be the maximum price that we should accept from our supplier so that they are checking the sale price. And if the purchase price, sale price difference is lower, this means business margin will be lower. And payment. Meanwhile, making payment, accounting department asks the purchase department whether you have a placed order for these goods. If they confirm, yes, these goods were ordered, then they will make payment. So while making payment, both these departments will communicate with each other. So payments will be approved by the buying department, but are made by the accounting department. So, but accounting department need confirmation from the purchase department. You have placed order for these, you have bought these items. They will confirm yes, then accounting department will make payment. Data capture, for example, orders mean how much is the order we have a place to the suppliers. these data should be transferred to the accounting department so that while receiving invoice, they can make sure, okay, this invoice is for that data. So order details will be input by the buying department and details passed to the accounts department so that while receiving a bill, they can compare data with each other. And inventory department as well. The purchase department will consult with the inventory section of the accounting department to determine the quantity of items already in store and therefore the quantity required so that they can order how much inventory we should buy. And while preparing budget, who prepare budget? Accounts department. What kind of budget? Purchase budget according to our future requirement. So they both communicate with each other. The accounting department will consult with the buying department on likely cost in preparing future budget. So these are the areas where purchase department and accounting department have to consult with each other, have to communicate with each other, have to link with each other in case of establishing credit terms from suppliers, pricing of the items ordering, payments against the ordering, data through order should be sent to accounting department for inventory. Purchase department will ask the balance from accounting department, and while preparing future budgets, accounting department will ask from the purchase department. How production department communicate with accounting department, in what situation they have to conversate with each other. So the production department plans and oversees the production of goods. It lies make a contact with the accounting department as follows. Lies mean contact relation. Cost measurement, allocation, and absorption. Meanwhile, preparing financial statements, sales less cost. What could be the future cost? What is the current cost per unit? Accounting department to take information from where? From production department. So the production department measures quantity of material and time used. The management accounts give a monetary value of them. Costs are then allocated and absorbed to calculate production cost based on the advice given by the production department. How much material will be used in one unit, how much labor will be used in one unit, how much overheads will be absorbed, meaning used in one unit of product. These information accounting department get from where? Production department. While preparing future production budget, accounting department have to communicate with production department. So the production department will decide how many items of what type are to be produced in future. The cost of producing these will be determined by the accounting and production department together and incorporate into the overall future budget. Cost versus quality. If we reduce quality, this means cost will be reduced. If we improve quality, how much cost will increase. So for this, they need to communicate with each other. So the production and accounting department will discuss the features that can be included in product and the raw material that should be used. They should agree with better quality material and feature justify the extra cost and discuss how the maximize quality and profit. And regarding inventory, how much inventory is available, how much production department need to produce. For this, they need to communicate with the accounting department. So the production department will liaise contact with the inventory section of ensure that there are sufficient raw material in inventory for production that is planned. So these are the areas where production department have to create contact with the accounting department in case of cost measurement, in case of producing future production budget, in case of decision on cost and quality improvement, and in case of availability of inventory of raw material, they need information from accounts department. How marketing department communicate with accounting department? Under what situations accounting and marketing have to communicate with each other? So the marketing department coordinates with the accounting department as follows. In case of preparing future marketing budget, mean what should be the future marketing cost, accounting department have to set aside that amount. So they need to ask marketing department, mean what amount you will need in future. So the accounting department will discuss the likely sales volume of each product with the marketing department in order to produce the sale budget. And advertising expenditure, what was the past advertising expenditure, what could be the future advertising expenditure. To measure these, to calculate these, they both department have to communicate with each other. So the accounting department will help the marketing department in setting up a budget and in monitoring whether it is cost effective. For example, they could help in measuring new business generated as a result of different advertising campaign. And for pricing, because marketing department have a responsibility to attract the customer, and customers can be attracted by lowering the prices. So how much price can be reduced to maintain profit of the business? They need information from accounting department, mean what is the cost of the product and price, how much we can reduce that we can offer to the customer. So the accounting department will have input into the price that is charged. Often products are priced at cost plus a percentage of profit. Even if the marketing department determine the price based on market forces, they need to consult with the accounting department to ensure that costs are covered. In how much minimum price we can offer to the customer, who can offer marketing department, and they need this information, the minimum price from accounting department. Market share. What is market share? Number of customer. Like if suppose you and there are four other businesses operating in the industry, mean you are five businesses, similar businesses operating in the industry. If all five are generating 10 million sales in a year, and your business is generating 3 million sales, this means 30% is your sale out of whole industry. This is your market share. Mean number of customer, how much customer you are having in the market, that is called market share. And every business want to increase their market share. How business can increase their market share? Through appropriate marketing strategies. So what is our market share? The marketing department will obtain this information from where? From sale figure, where that sale figure is in accounting department. So the accounting department can provide the marketing department with information on sale volume for each product. Mean what is the sale of each product, so that marketing department can measure market share of each product, and to help marketing department in determining market share. So these are the areas where marketing department contact with accounting department: budgeting, advertising expenditure, pricing reduction, and market share of the business as well as individual product. Now we are moving towards service provision. Some organizations do not sell products, they sell services like accountancy firm, insurance company, banking sector, health sector, educational institutes. They produce and sell services rather than products. What are the features of services? So services are said to have four main features. One is called intangibility. Intangibility, services cannot be seen. If an accountancy firm have provided accountancy services, taxation firm have provided taxation services, lawyer firm has provided lawyer services. So the results that have been achieved to the client is different. But the services they have provided, they cannot be seen. Means services has a feature of intangibility. So services are activities undertaken by organization on behalf of its customer and therefore cannot be packaged for customer to take away with them. They cannot see, they cannot touch. They often have a few, if any, physical aspects. For example, a taxi driver provided a service carrying a customer from one place to another. The customer do not have a permanent tangible product that he can keep with him. Obviously, customer have a pay against the services, but what he is having in his hand, nothing. In case of product, he's having physical product in his hand. But in case of services, he has taken the benefit of other person's services. So there is no physical thing in his hand, means services are intangible. Services are inseparability. Inseparability means these are linked to a person. These cannot be separate from that person. Mean to take service, you need that person who is specialized in providing those services. You cannot separate the service from the person. So services are often created by the organization at the same time as they are consumed by the customer. For instance, a taxi driver will create the service they offer as they are carrying a passenger to their desired location. The service cannot therefore be easily distinguished from the person or organization providing the service. Mean these are attached to the person. Without that person, you cannot take the service separate. And services are perishability. Meaning if a person who is providing services doesn't work for so many days, his working skills will be weaker. Means services become perishable. So services cannot be stored for later. You cannot say, okay, I'm gonna store these services for today and I will get benefit from these services in future. No, these cannot be stored. If a person will not work for so many days, his skills will be weakening. So for example, a taxi driver cannot take a customer to the same location at the same point in time twice. Once the journey is over, the service has been consumed. You cannot store that. And variability. Services are unique to each individual who is providing the service. One individual might be not providing the same service of another individual because these are variability having different nature as compared to different people. So each service is unique and cannot usually be repeated in exactly the same way, making offering the standardized services to customer very difficult. In different day, even if the same person is providing the same service, might be he cannot provide the 100% exact service as he has provided in previous time. So these are four features of services: intangibility, in to not having physical existence, inseparability, mean person cannot be made separate from services, perishability, mean can be consumed immediately, cannot be stored, and variability are unique and different in different times and from different people providing the services. The relationship between service provision and accounting. Mean what is the relationship between the department who is providing services and the accounting department? Mean how they communicate with each other when they need to share information with each other. So there are several issues about which the service department may need the input of the accounting department. Charge out rates, mean what the rate service provider should charge to the customer. They need information from accounting department because the accounting department can set prices. Accounting department will make sure how much we should charge to the customer against services. Obviously, the person who is providing the service, organization is paying to him. Suppose organization paying $100 per hour to the person who is providing the service. Whether organization should charge 100 to the customer? No. Normally, organization charge 3 times of the cost of service provider. Because organization have to make some profit, organization have to pay for other expenses as well, like building rent, electricity, phone, the staff, administration staff salaries, the building rent. So that's why the service provider have to ask the price charge to the customer from accounting department. And it depends. If any client, any customer is taking more services in bulk services, we charge them a little bit lower. We provide them some kind of discount. If our customer is requiring for small amount of services, we charge them a little bit high. For older customer, past customers, repeat customer, we charge a lower amount. For new customer, might be we charge a high price. So this is the hourly rate which the company charges client. It should be higher than salary. Mean if the person who is providing the services, his salary is $100 per hour. So normally we need to charge 300 to the customer. As it should include a share of overheads, mean expenditure, as well as any profit the company wishes to make. However, if the charge out rate is too high, excuse me, customers will not use the service. But we need to make sure how much high we should charge to the customer so that it should be according to the other competitors. What is the estimated cost of our service? To calculate this, accounting department need to consult with the service provider department. Because according to the nature of the work, who can provide the total number of hours worked on the service? The service provider. And then accounting department, according to those hours obtained from the service provider, can calculate the estimated cost. So to calculate cost of the services, accounting department and service provider need to communicate with each other, because according to the nature of work service provider need to perform, he can provide information about the hours worked. So problem arises in determining the amount of overheads to be included in the charge out rate. Also, if the service takes longer to provide than expected, the company will not be able to pass on to extra cost. So that's why according to the nature of work, they need to calculate the hours. They need to calculate in the total cost, and so that they can offer price to the customer. Problem measuring benefits. Mean what are the benefits that customer will receive by providing the service? Because we need to charge him below the benefits. If the benefits provided to the customer are of $100, we are charging him $300. So customer will not buy our services in future. So the benefit provided to the customer, to measure those figures, obviously those will not be actual, those will be estimated. The service provider and accounting department have to communicate with each other. Market condition may mean that the charge out rate contains a very low profit element. The company may question whether it is worth carrying out these services. The problem is that the benefits are intangible and not easy to measure, but nevertheless real. A company with effective service provision has a happier customer, and happy customers are more likely to buy more from the company in future. This would therefore lead to lower selling costs. Therefore, it is very difficult to measure these benefits of the customer, of the organization, but it could be calculated, estimated, not the exact, estimated by communication between service provider and accounting department. So these are the three areas where accounting department and service providing department have to communicate with each other. The price charged against services to the customer, to calculate estimated cost of the services, and to calculate in measuring benefit provided to the customer and to the organization against services. This chapter has completed. how accounting department work with other function of the organization. Which of the following is an example of coordination between the purchasing and accounting department? Establishing credit terms. Are they communicate with it? Establishing credit terms. Mean how much credit we should obtain from the supplier? Yes. Determining sale prices. No. Purchase relating to purchase prices. Allocating cost. No, this is relating to production department. Calculating pay rises. Pay rises is relating to payroll rather than relating to purchases. So this is our main. Which of the following is not an example of coordination between the marketing and accounting department? Review cost benefit of advertising. Yes. For pricing, yes. Assessing market share, yes. Assessing creditworthiness. No, it's relating to sale, not relating to marketing. Which of the following is likely advantage of providing a good service? Greater customer satisfaction. Obviously, if you provide good service, customer satisfaction will be greater. High payroll cost. Oh, this is not relating to providing service. High inventory turnover. This is not relating to providing service. Economies of scale. This is relating to production rather than providing service. So, A. Number 4. Most service provided by an organization will be created at the same time as are consumed. What does this feature of service? Intangibility is relating to physical things. Inseparability, yes, that cannot be separate. Perishability cannot be stored. Variability is different. So what's that? B option, inseparability. So chapter 15 completed. Now moving towards chapter 16. The name of chapter 16 is Audit and Financial Control. Audit and Financial Control. The same chapter you will study in next level, AA, Audit and Assurance. Same chapter you will also study in skill level, AA, Audit and Assurance paper. But they have included here, so we need to get knowledge of these things. The meaning of internal control. What is internal control system? Policies, procedures implemented in the business is called internal control system. Policies, procedures implemented in the business is called internal control system. There are 5 components of internal control system. There are 5 components of internal control system. These things we're going to study later on. So what are the 5 components of internal control system? Control environment. What is control environment? Attitude of top management. Tone at top. In the internal control system of the organization depend upon the attitude of top management. If the top management is having positive attitude regarding policies, procedures, mean they themselves are following rules, everybody else in the organization will be influenced by them. They try to follow their superiors. This means everybody else working under them will also be following policies, procedures, and rules, mean control system will be strong. If the tone at top is negative, mean top management themselves not obeying the rules, not following policies, procedures, not working according to rules, this means nobody in the organization will work according to rules. So this will create poor control system in the organization. So to implement an effective control system in the organization, the top management have to provide positive attitude regarding policies procedures because they set the culture of the organization. They are the role model of the organization. If they are corrupt, they don't care about right wrong, nobody else in the organization will care about right wrong. If they are honest, they care about others, they consider right wrong properly, everybody else will be caring, will focus on right and wrong, mean you will be having a good culture of the organization. So this is the first element of internal control system. Like top level management have to show positive attitude regarding policies, procedures, and rules. They should obey the rule first. They should lead by examples. So the overall attitude of management regarding internal controls and their importance. It encompasses management philosophy, for example, a commitment to integrity, ethical values, a formal organization structure, and proper training of staff because they influence others. The employees working under them follow them. The second component is entity's risk assessment process. Mean how business organization is identifying and managing its business risk. If they are preparing a proper risk management strategy mean they identify risk and they try to control those risks properly by implementing different policies. This means business risks are under control. If business risks are under control, this means control system will be strong. If organization is not preparing risk management strategy, mean they are not identifying, controlling their business risk are not under control, this is a sign of a weak internal control system. The third component is information system. Information system means a communication system, a decision making system. If the communication system and decision making system are quick, mean information sharing with each other is quick, they are making on time decision, this means business things are under control, this is a sign of good control system, sound effective control system. If the communication system is poor, slow, if the decision making system is slow, means business do not make decision on time because the information is not communicated on time, so this is a sign of poor internal control system. How business can implement quick communication and decision making system with the use of IT technology. If they are using IT technology in their communication decision making system, control system will be strong. If they are not using IT technology, mean through manual system, then communication decision making system will be slow. Information will not pass to other departments quickly. Other departments will not be able to make a decision on time because information is not passed on time. So this is a sign of poor control system. So this consists of the procedures and record establishing to process the transaction and the entity carries out and to maintain accountability of the related assets, liabilities, and equity balances. Many information systems make extensive use of IT because through IT, you can make quick communication and decision making system. And nowadays, only those organizations are surviving who are making decision quickly, mean making changes before competitor, adopting new technology before competitors. Those are innovative and they survive in the organization. With the slow communication, slow decision making, you will not be able to adopt innovation and you will be losing customer towards competitor. Control activities mean there should be some controls in the organization. What are those controls? They have been abbreviated with ACCA maps. ACCA maps. ACCA maps. A stands for authorization, C stands for comparison, C stands for computer control. A stands for arithmetic control. ACCA, authorization, comparison, computer control, arithmetic. And MAPS stands for management, maintaining a trial balance and control system mean management, accounting reconciliation, also called accuracy, physical control, and segregation of duties. These are the minimum control policies that every organization should implement. If these minimum control policies are working in organization, control system will be strong. If these minimum policies are not working in the organization, control system will be weak. What are these? Authorization, also called approval. Before making order for high value items, there should be proper approval, there should be proper authorization from the departmental head, so that unnecessary buying can be controlled, so that liabilities of the business can be controlled. So there should be authorization, there should be approval for buying large value items. Comparison there should be comparison. Like while buying goods, you should compare the quotation of one supplier with others. There should be comparison. If one sheet has been produced, you should compare with other sheet. While receiving goods, you should compare with order. While receiving invoice or sending invoice to the customer, you should compare with dispatch note and orders. This is called comparison, so that you can ensure you are invoicing against goods sent, received, or ordered. There should be some computer control as well to avoid misuse of the computer. There should be some physical control. Physical control means computer system should be placed in a secure room. There should be some logical control. Logical controls mean there should be password, so that only authorized user through password can have access to the system. And arithmetic control, if there is anything prepared which involves calculation of figures, those figures should be recalculated by another person to ensure the figures are accurate, to avoid errors in the accounts. There should be recalculation of the calculated work performed by one person, so that to ensure there is no arithmetic errors, so that two accounts should be produced. What is maintaining a trial balance and a control account mean? Organization should maintain trial balance. What is trial balance? The debit figure should be written on one side and credit account balance should be written on other side. And the total of both sides should tally with each other. Because in accounting, when we record transactions, there are dual effect. One is debit, one is credit. If these both totals agree with each other, this means the accounting entries was accurate. If both figures do not agree with each other, debit and credit of trial balance, this means there are problems, there are errors in the accounts that we need to identify and rectify. Same with the control account. While recording entry in receivable and payable ledger, individual ledger, we need to record with control account as well. So that at the month end, if we are having suppose 10 different receivables, we need to add their balance and compare with control account. If the balance of control account is the same as compared to total of individual ledgers, this means there is no recording errors. If these balances of control account and individual ledgers total is not agreeing with each other, is not equal with each other, this means there are posting error problem that we need to identify and rectify in the financial statement. Accounting reconciliation, we need to reconcile accounts. Reconcile means we need to reconcile control account with individual ledger. We need to reconcile payroll accounts with payments to the employees. We need to reconcile payment received against sales to the sales account or receivable account so that we can identify there is no difference. Physical control means there should be some physical control over high value inventory and assets. Like there should be security guard to avoid misuse of high value inventory and assets. There should be CCTV cameras so that if any person is misusing the asset or inventory or try to steal asset or inventory, that can be traced, that can be detected through CCTV cameras. There should be lock rooms where we are keeping our high value inventory and assets. There should be lock rooms so that nobody can access to the high value inventory and asset. And through this, we can avoid misuse of assets and inventory. There should be some physical control like security guards, lock rooms, CCTV cameras. And there should be segregation of duty control. Segregation of duty means separate staff for separate function. Mean no one staff or department should be responsible for all the functions. Otherwise, it's easier for one staff member or one department to make fraud. If there are separate staff available, mean one for receiving cash, one for recording cash. So this we can avoid misuse of cash. So there should be segregation of duty, means separate staff responsible for separate function. If one staff member is responsible for all function, it is easier for him to make fraud. If there are separate staff, then fraud can be detected by the other staff member. So these are the minimum controls that every organization should implement in the organization to have a good internal control system in the organization. What we are studying, there are 5 components of effective internal control system. Control environment, mean top level management have to show positive attitude regarding control policies. There should be risk management strategy to control business risk. There should be quick communication and decision making information system. These minimum controls should be implemented in the business, and there should be monitoring of control, the 5th element. Monitor control means there should be a person who should monitor whether these policies are being followed in the organization or not. Who is responsible to monitor these policies working properly or not? Company management directors. But if they are busy in other tasks and they have no time to monitor these controls, then they should appoint internal auditor in the organization. Who is internal auditor? A person who is appointed by company management. What's the role of internal auditor? His role is to review internal control system to see whether these control procedures, control policies, control activities properly followed by or not. If these are monitored, these controls will be followed by these control will work in the organization, mean control system will be strong. There is no monitoring. So might be some of the policies, some of the activities are not followed by. And this will weaken your internal control system. So there are 5 elements of internal control system. One is called control environment. Second is risk assessment. Third is information system. Fourth is control activities. And fifth one is monitoring control. Why organization should have control system? I mean, what is the purpose of internal control system? To control system, you can run your business operations in orderly manner and efficiently manner. And you can achieve efficiency, effectiveness in business. Through control system, especially physical control, you can safeguard your asset high value inventory. Through control system, you can prevent and detect fraud and errors in the financial statement, especially the reconciliation, the accuracy control. Through internal control system, you can produce complete and accurate accounting records. Through internal control system, you can produce reliable financial statements and on timely basis. If there are no policies, your accounts will be wrong. There will be chances of frauds and errors in the accounts. You might not be producing accounts on timely basis. So these are the purposes of internal control system. I mean, why organization should implement internal control system? To conduct business operations efficiently and effectively, to safeguard asset of the business, to prevent, detect fraud and errors, to produce complete and accurate accounting records, and to produce reliable and timely financial statements. Why do company needs internal control system? These are the purposes. That's why company need to implement internal control system in the organization. And for listed companies, it is required by corporate governance that company should have a internal control system. It is a requirement of corporate governance as well. Corporate governance we have already studied. Alternate investees of internal controls mean there are some controls in the organization that prevent fraud and errors. There are some controls that detect fraud and errors, and there are some controls that correct fraud and errors. Prevent me stopping the chances of incurring fraud and errors. Stopping the chances of incurring fraud and errors. Detect mean through internal auditor, he will review different things and he can detect fraud and errors. And then management needs to correct those fraud and errors so that financial statements can be produced true and fair. So some controls relating to prevent fraud and errors, some controls relating to detect fraud and errors, and some controls are relating to correct fraud and errors. What's meant by preventive? Prevention. Controls that prevent error or fraud occurring, for example, authorization control to prevent fraudulent or invalid transaction taking place, safeguarding of duties, recruiting and training the right staff, have effective control culture. Mean authorization before placing order. Mean there should be purchase requisition before placing order. So through this, you can avoid ordering of personal use, and this is preventive control. If you have implemented segregation of duty, means separate staff or separate function, this means you are reducing chances of occurring fraud, mean you are preventing the occurrence of fraud. If you are providing proper training to the staff, if they will be trained, they will work properly, there will be less chances of errors. So you are preventing the problems, you are preventing fraud and errors. Examiner could ask during in the MCQs, what are the preventive controls? Authorization, segregation of duties, training to the staff. What are the detective controls through which you can detect fraud and errors? Controls that detect any problems have occurred. They are designed to pick up errors that have not been prevented. For example, exception report. What is exception report? Exception report. Like company have prepared a budget. There are certain expenditure that have been estimated, like during a year we need to make these expenditure. At year end, what they need to do, they need to compare with actual results. In actual figures, compare with the budget. If there are any differences that will be highlighted, this is called detective controls. Mean exception report. Exception report mean a report that will compare actual with the plan and highlight the differences. Exception report mean a report that will compare actual results with the plan with budget and highlight the differences. That is called exception report. And what is this exception report? Is for detecting, mean highlighting issues that reveal the controls have been bypassed, such as large amounts paid without being authorized. Reconciliation, mean through reconciliation by comparing one data with other, mean actual results with budget, we can highlight differences. That is also called detective control. Supervision, through supervision, you can check if anybody is not working properly. You can highlight problems. That is also called detective control. So what are the preventive controls? Authorization, segregation of duty, training. What are the detective control? Exception report, reconciliation, and supervision. What are the corrective controls? Mean those things that processed after finding the problem. So controls that address any problems that have occurred. When problems are identified, the controls ensure that they are properly rectified. Examples of corrective controls include follow-up procedures. Mean after implementing a procedure, you are following up whether it is working properly or not, and action against highlighted weaknesses. Mean action of management against weaknesses, against issues. This is called corrective control. Or follow-up procedure mean after implementing a policy procedure, you are following up. We are checking up whether these are working properly or not. This is called corrective control. Information technology and internal control. Now we are moving towards another topic, information technology and internal control. Nowadays, organizations are using different computerized system, computerized software. In that computerized software, what should be the controls over there? I mean, we are going to study now computerized control. I mean, what should be the control over computerized system in the organization? There are mainly two types of controls called financial controls and operational controls. Financial controls that are relating to finance, that are relating to payment and receiving of money. While operational controls are relating to the operations, like relating to the production, relating to the purchase, relating to the sales, relating to the payroll system. Financial controls, this involves IT being used at a check for financial data in the organization. This could include ensuring the security of financial data. Like if you are keeping your customer details, especially their payment detail into your system, you need to maintain security of that data. Otherwise, the hacker or your employee can misuse that payment data detail of customer. So you will be liable for that. If customer lost anything due to leak of data from your system, you will be liable for that. So that's why you need to keep some security controls over that data, such as through the use of password and authorization. But it could also allow organization to make sure the financial procedures are followed. For example, many businesses have IT-based sale ledger facilities. The system could be set to prevent staff making sales to customers who have already reached their credit limit. Because for every customer, organization set a credit limit like up to 100,000. They can take order on credit basis, not above than this. Because we set credit limit according to customer affordability. So might be one of the staff member is having a relationship with the customer and he is selling product to that customer above 100,000. So we need to keep control over these things. Like these things should be implemented into the system. Like if anybody want to place order above 100 or process order above 100, system should stop it. There should be some procedures. There should be some controls into the system. And those controls are called financial control. It is our organization policy that new customer can receive credit limit up to 20,000. If suppose one of our employee creating 50,000 credit account to a new customer, this should be stopped by our system. This should be not be allowed by the system. These are called financial control that should be over our system. And there should be some operational controls relating to control day-to-day operation of the business. This is where IT used in a control on a day-to-day activities of the business. For example, manufacturing business may have automated system that check each unit and reject that they are defective. Units producing through the system should be checked by a machine. If they are defective, they should be set aside. If they are accurate, they should be put for the packaging operation. Now we are moving towards learning IT controls. There are two types of IT controls. And there are two types of policies that work on computerized system. One is called general IT controls and other is called application controls. General IT controls and application controls. General IT controls are controls that work in all type of organization over the computerized system, so that the system usage should be fair. For the fair usage of the system, there should be some general IT controls so that the misuse of system can be avoided. What are the general IT controls? Physical controls, like the system, your organization computer system is very expensive. It's a main part of your organization. It should be placed in a lock room so that no unauthorized employee should have access to the system, so that they cannot misuse the hardware of the system. The system should be under CCTV cameras, so that in case of off office timing, anybody is having access to the system and misusing the hardware can be detected through the CCTV cameras. The system room should be supervised by a security person who should ensure only authorized person are entering to the system room and unauthorized person are not entering into the system room. So there should be some physical controls like security cameras, like lock rooms, like security guards over the system to avoid misuse of the hardware. And general controls also include hardware and software configuration. Mean whenever you are implementing new hardware or software into the organization, the staff should be given training for the usage of that system. And there should be testing of the system before putting it into the operation. Through testing, you can identify whether system is working properly or not, so that you can avoid future problems. So while implementing, while configuring new hardware, software, staff should be trained and the system should be tested to avoid any problems, to identify any problems, to rectify any problems before putting into implementation. There should be some logical controls. Logical controls mean there should be passwords. There should be restricted login ID, restricted login ID, so that every person should access data files relating to his work. He cannot access files to other department, so that only authorized user can access the system and work on it. And this should be established through password. If there is no password, there are no restricted login ID, the software can be misused by the employees. There should be some output controls. What is meant by output controls? If system is generating any reports, those reports should be distributed to authorized person only. if any output produced by the system is sent to another appropriate person through email or through message, those should be sent through password protected file, so that if any other person can hack the email, can hack the message, cannot misuse that information available in the output. So either output produced by the system should be sent through email, through password file, or in encrypted file. What is encrypted? Encrypted also means password protected file. There should be some controls relating to technical support. Mean for system design, there should be separate person. For system usage, there should be separate person. If the system using person mean data entry operator and system designing mean IT professional are the same department, they can misuse the system by creating design according to their need. So there should be separate staff for system usage and system design. So what are the general controls? General controls should be there to avoid misuse of hardware and software. What could be these? Physical controls over the system, means should be security guards, CCTV cameras, lock rules. Controls relating to hardware software configuration, mean user should be trained before putting into operation the new hardware and software, and new system should be tested before putting into operation. There should be logical controls, like there should be restricted login ID, password, so that authorized person can have access to files relating to their area only. And there should be output controls, like sensitive output produced by the system should be transferred by using password protected file or encrypted file. And there should be technical support, mean you should have a IT department that can identify and correct problems in the system on timely basis so that operation can be continued. There are some application control. Application controls mean controls relating to the processing of data into the system. Controls relating to processing of data into the system, and these will be very different from organization to organization according to their processing of data. What we need to do? We need to input data into the system. System will process it and provide output. These application controls are relating to this input. If we input complete data into the system will process accordingly and will provide the complete output. If the data input is incomplete, can we get the complete output? No. This input should be entered into the system through authorized user only. If the input data is entered through unauthorized user, they might enter wrong data into the system. That will be processed and the output produced will also be wrong. This input data entered into the system should be accurate. If we have entered wrong data into the system, then we will get wrong output. So application controls are mainly relating to input of data to ensure the data input should be complete, should be accurate, should be valid, and should be entered through authorized user. So that system should process according to that, and we will be able to get a correct, complete, and valid output. So what are the application controls? These controls are fully automated and tend to be designed to ensure that the data input into the system is complete and accurate. These controls will vary from system to system, but are often designed to ensure completeness. Has all necessary data been input into the system? You should ensure this. Authorization mean only the authorized user should have access and enter data into the system. Identification mean your system should identify the authorized user, not through password, because password can be stolen. System should identify authorized user either through thumb impression, either through face ID, either through retina recognition. Validity, the data entered into the system should be valid, mean should not be invalid. And there should be some forensic check. Forensic check means there should be some mathematical accuracy check on the data, means system should perform some mathematical check to check whether the data is arithmetically accurate, and checking arithmetic accuracy is called forensic check by applying different formulas of maths. So there are two types of IT controls: general IT controls and application controls. What are general IT controls? Physical controls, hardware and software configuration, logical control, output controls, and technical support. What are the application control? Completeness, authorization, accuracy, validity, and forensic check. Examiner could ask in the MCQs whether these are general IT controls or application control. Who is responsible for implementing internal control system in the organization? The management of the organization. So the directors and senior management responsibility to establish proper internal control arrangement within the company. Their responsibility may drive from a statutory requirement, mean according to corporate governance rules, they have to implement internal control system from general corporate governance arrangements. It is a annual assessment of internal control. The board should consider the change in the nature and extent of significant risk since the last annual assessment. Mean they have to review their internal control system on annual basis, whether they need any improvement in that or not. The scope of management's ongoing monitoring risk, the incidence of any significance control failing weaknesses, mean they have to review if there are any weaknesses, they have to overcome those weaknesses. And for that, if they are not expert in monitoring of internal control system, they should appoint internal auditor in the organization. It's not compulsory, but it's better if they appoint internal auditor, because through internal auditor, they can implement a good internal control system in the business. Because internal auditor review the internal control system of the organization. And after review, if he has found any weaknesses, he will report weaknesses in internal control system to management. Not only report weaknesses, he will provide recommendation to improve those weaknesses. And he will guide the management how they can minimize the weaknesses, how management can implement sound, effective, good internal control system in the business. Who appoint the internal auditor? Management of the company. For what? For their help. There is another auditor called external auditor. Who is that? External auditor is a third party who is appointed by shareholder. Why? To check the financial statement. And he is not employee of the organization. He's a third party. Where he is coming from? Any audit firm. His work is to check the financial statement and report on the financial statements whether financial statements are true and fair or not. Internal auditor is employee of company, is appointed by company management, and his main role is to review internal control system, but management can ask him to perform any of the role. They can take help from internal auditor in any of the tasks in the organization because he's an internal person. But external auditor, his role is only single and one, and that is to check the financial statement and provide audit report on the financial statement. So what is the difference between internal and external auditor? The role of internal auditor is mainly to check internal control system and report weaknesses to the management, but management can take help from internal auditor in any of the area within the organization. But the role of external auditor is to provide report on the financial statements, opinion to the shareholder whether financial statements give true and fair view or not. External auditor is legally required, compulsory. Every listed company should appoint external auditor to audit its financial statement. But internal auditor is not mandatory. It's better for a company if they are having internal auditor, but it's not compulsory. If management can review internal control system by themselves, there is no need for internal auditor. But it's better they should appoint internal auditor. It's not compulsory, but external auditor is legally required for all listed companies. The scope of work of internal auditor is defined by management. Mean what he will do, management will define whether he need to review internal control system, whether they need help in accounting function, whether they need help in sale purchase system, inventory system, management will define their role. But the scope of external auditor is defined by the standard. And that is only one to report on financial statements. The approach of internal auditor is wide. He will be doing a risk-based audit. He will be evaluating system of internal control system, providing recommendation for improvements. But external auditor approach is to just check financial statement and highlight the weaknesses, ask the management to correct. If they do not correct, he will say financial statements do not give and favor. In his approach is limited, while internal auditor approach is wide. There are some limitations of internal auditor. What are the limitations? He is working under management. So sometimes he cannot highlight the weaknesses where management is involved himself. Mean he cannot work independently. Independently mean without any pressure because he is appointed by management. So sometimes he failed to highlight weaknesses relating to management mean his independence is a problem. External auditor is always independent, third party, working without any pressure. Internal auditor work is only success if it is properly staffed and resources. If it is having a less number of staff, he's having no resources like software to check the computerized control, his work will not be effective. This is the issue. Because sometimes companies do not create proper internal audit department to save the cost. If they are having less staff, they will not be performing their function properly. Internal auditor identify fraud that may be unwilling to disclose if for fear of the repercussion, mean who the person who is involved in the fraud is of top management under which internal auditor is working. So he sometimes do not highlight that fraud. Even knowingly there is fraud. Because if he will highlight, might be management person who is involved in the fraud will take action against him, might be dismissed from his job. So to save his job, he sometimes hesitate to highlight frauds involving management. This is the issue because he is working under management. So these are the three problems with internal auditor. He is not independent. He is not properly staffed and not having resources. And sometimes to secure his job, he hesitate to highlight frauds involving management. And to resolve these problems, according to corporate governance, there should be audit committee in the organization. Audit committee means non-executive directors committee in the organization. And this committee should review the work of internal auditor. Internal auditor should report his work to audit committee. And by reporting his work to audit committee, his independence can be ensured, his resources can be ensured, And he will be highlighting all frauds easily because he is not reporting to management. He is reporting to independent person's audit committee. But if there is no audit committee, then these are the three problems that internal auditor have to face. So how audit committee can avoid these limitations? Audit committee set the work agenda of internal auditor, mean what he will do. They will receive internal audit reports and take action on this. Is able to ensure the internal audit is properly resourced. If there is shortage of staff or shortage of resources, he will ask the audit committee to provide, and has a voice at main board level, mean he can raise all the frauds even relating to management through audit committee, not directly, but indirectly through audit committee. But if there is no audit committee, then internal auditor will be having these three problems. What are the advantages of external audit? What are the advantages of external audit? Dispute between management may be more easily settled. For instance, a partnership which has a complicated profit sharing arrangement and they are arguing with each other. So external audit report can highlight the issues, can highlight the true picture. Through this, dispute between management, even with the shareholder, can be easily sorted out. Major changes in ownership may be facilitated, like if any investor want to make further investment in the business, so he can take a decision based on the audit report easily. If audit report is in favor of the business, mean financial statements give and fair view. This means management running the organization properly, they can make further investment. Application to third parties for finance, especially the bank want to approve loan for the business, they can make a decision based on audit report, because audit report will say if financial statements results are true or not. If they are true, this means bank can make decision easily. The audit is likely to involve in-depth examination of business, mean through this business issues can be highlighted and those issues can be improved by the management easily. But there are some disadvantages. The audit feels clearly the service of an auditor must be paid for, mean organization have to pay for the audit, mean audit is costly. The audit involves the client staff management in giving time to providing information, mean for audit. Auditor need some time, some information from the management, from the staff. He need to check the records, and through this business operation might be disturbed a little bit, because staff have to provide information to the auditor, have to provide access to the auditor, mean they have to keep that time from their routine work, mean they might feel disturbance during the audit. Internal control and audit. Why internal control entrust the external audit? During external audit, the external auditor is also checking the internal control system. Though it's the responsibility of internal auditor, but external auditor will also check the internal control system whether they are operating effectively or not. Because if internal control system are working effectively, this means financial statements will be true and fair. If internal control system is poor, this means policies, procedures are not being followed properly, financial statements will not be true and fair. And if external auditor highlight any issues in internal control, he communicate to the management first. Please correct these issues. If they correct, he will issue audit report in favor of the company. But if management do not correct those issues, then he will issue audit report against the company. During external audit, internal control system is also reviewed. So reliance on internal control will reduce the amount of substantive testing. This is too much detail. I think you should avoid these things because these are purely relating to audit. There are two types of procedure in audit: test of control, substantive procedure. When auditor performs substantive procedure, when auditor performs test of control, we will study it in audit and assurance paper. Just to remember, external auditor also check the internal control system, but not his main purpose. His main purpose is to report on financial statement. Whose main responsibility to check internal control system? Internal auditor. Why internal control? Interest in the internal auditor, because it's his main responsibility to check the internal control system and report weaknesses to the management. This is the main role of internal auditor. Ensuring the effectiveness of internal financial procedures. Effectiveness is a matter of the extent to which organizational objectives are being achieved. Management objective for internal financial procedure will include following. Meanwhile, management should ensure whether financial controls are working properly or not. Again, he has explained the purpose of internal control system. Through this, we can produce or perform business operation effectively, efficiently. We can safeguard asset. We can prevent fraud and errors. We can ensure accounts are complete and accurate, and we can produce reliable and timely financial statements. The same things repeated here again, the purpose of internal control system. And now this chapter has ended. Moving towards MCQs. External auditor report are addressed to which of the following groups? Who appointed the external auditor? Who appointed the external auditor? Shareholder. So his report is to the shareholders. Who appointed the internal auditor? Management. His report is to the audit committee or management. So external auditor report is to whom? To shareholder. Because he is appointed by the shareholder to check the financial statement. The primary purpose of internal audit is to ensure that the financial statements are true and fair. No, this is the purpose of external auditor rather than internal auditor. Prepare management accounts. No, this is the purpose of management of the company rather than internal auditor. Review risk management process and internal control system, or suggest operational strategies to the directors. What is his primary role? Review internal control system. Risk management process is a part of internal control system. So option C. Which of the following group is responsible for the creation and operation of satisfactory operating controls within the organization? Which of the following group is responsible for creation and operation of satisfactory operating control within the organization? Who is responsible for implementing control in the organization according to corporate governance? Directors, management, board of directors. They should review internal control system if there is no internal auditor. He should review internal control, not implement. He has no responsibility for these things. So option A, only management is responsible. Number 4. Which of the following is not one of the component of internal control? There are 5 components: control environment, risk assessment, information system, control activities, monitoring of control. So risk entity risk assessment is a part. The documentation of control procedure? No. Monitoring of control? Yes. Control environment? Yes. Contrasting the actual performance of business with the budget performance for period is an example of which control activities? And if you are comparing actual with budget, what is that? Arithmetic control? No, that is called recalculation. Accounting reconciliation? No. This is comparing actual results with budget. This is not physical control, because physical control is CCTV cameras, lock room, and security guards. So this chapter has ended. Hope to see you in next class with something new.